The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, early edition. This is 8:06 a.m. in the morning. It'll be replayed at 10:06. So we've got on the 3rd, this is Thursday, the 3rd of April, we've got the tariff story from yesterday. Markets around the world just took a dive. We'll look at it in a moment in detail, but let me just run the numbers. The Dow's futures are down 1,179 to 41,313. The low of the 13th in the futures was 41,047. That's what I believe we're going to attempt to tackle. That's different to the S&P. Let's go to the E-mini for the moment, ES. That has gone, 4 days ago, it went below that left side low of the 13th, ran very sharply to the upside yesterday, went all the way to the 57.80s. Right now it's at 55.24, just off its low. The low today is 54.81.00 in the E-mini. Down 187 at 55.25. Here's the pattern that I'm looking at in the arch formation. It says the next key support this is going back to the monthly low of August of this year at 53.03.75. I've drawn in a Chapman wave inside wedge target. This is a target support line. And that says that give you the exact number, this week, that goes to Friday, 54.56 will be key support. And if the trajectory is right, it says in another couple of weeks we should be testing, or we could do it much quicker, and I'll talk about that in a moment, that low that was made back in August of last year. Let's go to the IWM. No, let's go to the NQ. I haven't done this updated yet in the futures. I've done it all in the cash position. Futures. So when I look at the charts themselves, this has been extremely orderly. It's just an arch formation. The number of bars to the upside and the number of bars to the downside is kind of what we would be looking at. Crash material is where the price on the right side from the high that's made just takes out bars and bars on the left side, and it goes right through them, and it takes out umpteen bars, and it's just straight down. Now, that could be the case from this arch pattern that is going all the way around. Let me just draw it in here. Right there. That's the arch formation. And let's do this, the inside wedge target. That line should go somewhere around like that. And then I would draw in the left side, right side price symmetry. But you can see that thus far, and the day is young, the week is young, the month is very young, we've just begun it. Anything can happen. But the point that I've been making for a little while is that there's been a rotational correction, and that the XLK, that is the S&P Select Spider Tech Fund, that has had a much severer decline on the right side if you look at the weekly chart, because since November, December, we've been looking at this and saying these tech stocks have just gotten away, and that we're going to see some kind of a rotation into more value-oriented type stocks, and it's going to take a while. And that's the rotation that I think I'm going with right now. So yes, this is absolutely ugly. I don't see it as the same format for the crash charts that I had hand-drawn from 1987. And then, of course, we went to computers, so that's all done by computer, by the data-driven information. But this is a little different in the sense that what we're looking at is overbought sectors like the semis And look at this arch formation. So far, this is just a very normal rally up, and then you arch over. That can change, and I'm going to go through that in a moment. But what I want you to point out that the SMHs are down pre-market, down almost 10 at 204, and they did this arch formation, took out the left side low, and I've been warning that this is the one that is a big worry to me, in that this monthly chart with the dreaded H pattern could very well see the low taken out, so that we start to trade in the 190s. We're at 204 right now. 198, 197 says, woohoo. Now you're below the the week of the 9th of August low of 200.49. Haven't got there. I suspect we're going to get there. Now, I just wanted to point this out, three things. One is the volatility index, the VIX index. And remember, this is an early edition, so we don't have, the market hasn't opened. We haven't even got the 8:30, any economic news, anything like that. But the VIX index trading right now at 2616, up 4.65. 2957 was the high back, I think it was the 11th. The 11th of March, remember, 2 days before the market turned. And it hit the 200-period moving average and has rallied very nicely. I'm going to draw this in here. So there are a couple of things that I want. So that number one is that the patterns are a little different. That's not to say that this market isn't going to just keep going down, down, down. I'm just saying that the pattern that I was looking at, now Larry Pesavento has been shown the way he's been looking at the market, and absolutely correct. He's been showing how there's a relationship to a chart that he has of the Dow from 1929. I've gone back and I see something not quite the same interpretation, but the chart obviously is the chart. But we're going to see what happens here, because the number one is I wanted to talk about the chart formation. Number two, I wanted to talk about the volatility index, that I've been talking about this all the time, saying this volatility index is pushing away from the 200-period exponential moving average, and for the first time it's starting to have very big bars above that. And you've got to, I've been considering the reason why for my opening call subscribers, we have we're short the Dow, we're short the S&P, but it's not enough. But, at least we're short. And we've been whittling away at our stock position, so that we've been taking off. Now we have very few. And we have some that we bought way lower. I'm considering that those might have to go as well. I'm considering it. I haven't done it yet. So we've got a very nice cash position, and I want to be putting that to work, but I don't want to be impatient. So that's number two. Number three is I just got an email. This is from a senior economist, and he just sent me something from a colleague of his discussing the tariffs. Now, my friend is a specialist in tariffs, and he's been talking about tariffs for quite a while, that there's a misinterpretation. Well, this is just sent to me, and I'm just, if I can read it, let me just squint out here. So it says, so the list of tariffs yesterday that was shown on that kind of scoreboard, there's a big question, because those aren't the true tariffs. That's a relationship that isn't the real relationship, and they are very skeptical about the whole thing. And I'll see if I can get into it. Maybe tomorrow I'll get into it. Now today I want to get into more stuff, and I'll be back in a moment. Basil Chapman, early edition, 8:14 a.m. in the morning.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Let me just do this. I'm trying to send this to another email address of mine so that I can read it. Okay, here we go. All right, let's send it. Okay, sending. Go. Here we go. All right, let's see if I can get that and I can read it. But it's really interesting because it goes into the details a little bit more. It isn't quite so easy. Okay, so let me go through. There's a fourth thing that I want you to talk about, and that is that the volatility. If there is a sharp rally today in the futures, what you really want to see is that to get some kind of a decent tradable low, I'm talking about a couple of weeks, not just hours, the volatility index, which is up at 26.13 right now, and the market itself usually is Friday and Monday. Those are the days that I look for major turnarounds. This is Thursday. So if at any point today there's a rally that fails and then you plunge to another low, tomorrow we might see the volatility index screaming into the 30s. And in the 30s, I'd spoken about this last week. I said, I think in the 30s is where we've got to start looking to see whether or not we're getting some kind of a tradable rally, because it should be a reversal from a very hysterical overbought level to the prices of the indexes going to lower lows. We'll see if that's going to happen. I'll go through that as we move along a little bit, because the other thing that I'm looking at is the bonds. Because I had been speaking about this for a little while, saying, gee, this is the first time that I've been seeing bonds holding up so that yields come down a little bit in a market sell-off. We haven't seen that because that was the norm for about 40 years. You got money flowed right into bonds the moment the market got toppy and started pulling back sharply. So if that's the case, and what I've been saying is that the difference that I'm looking at in the vernacular, that is in the overall market scenario, is that we've not had this. Name me one area over the last couple of months that was just going hysterically to the upside, where everywhere you went, people were talking about it, like Bitcoin, or let me just do Bitcoin right now to say, look, I haven't finished going through these. Look, Bitcoin's down 4,255. And there's the H pattern, but it's actually holding pretty well when you think about it. But that weekly chart says, I've been a little afraid of that. We still have our Bitcoin position that we got in a while back. It's still up nicely, but we've been taking off right even at the top. We were taking a little bit off. So I have to make a decision now. Do we want to keep the Bitcoin, or do I want to get out of almost everything and say, hey, we'll start fresh because this market isn't finished going down yet? And that's the level that I'm looking at. So just to go back to that other point that I was making, is that bonds. So here we are, bonds are up $1.50 today at 119.5, breaking out to a new recovery high, not an all-time high, but a recovery high, and therefore the yields, that's the can I show that now? Yeah, I can do it. It isn't being traded right now, but it's down 54 cents at 32.55. So this is the yields. The yields are now at 3.25. We've been looking at yields that were up at 3.52, sorry, just a week ago. So this is, look, lower lows and lower highs. That's what you look for. So that says to me, in the overall picture of the bonds, that lowercase h that goes to a lowercase m successfully is held above the low that was made back in October of 2023. Then we went arched over, made a slightly higher high, but another arch. But that's the lowercase h that goes to a lowercase m. Remember in the Chapman wave methodology, we're always looking at these H patterns. We just looked at the H pattern in the Dow, the S&P, etc. This is the H pattern. But if it doesn't take out that low, or it doesn't hold under the low and quickly rallies, if it doesn't have a very sharp rally, all it can do is it makes another H pattern. So it goes lowercase h to an lowercase m. And that's really the big thing, because if that M has a very short move to the right side, arching over, all of a sudden you can get this pattern that says, whew, that's a huge cup formation, and you should take out that high. Well, so far, what we're looking at is it's a bit of a rally, but it's not a big deal. All right, it's just a bit of a rally. So H goes to lowercase m. Yields are still stuck in this range, right? Bonds are stuck in this range. The yields are stuck in the upper range, but they're not breaking out. They're not breaking down just yet. But this is something that's really important. And this is what I was saying is different to other major sell-offs. And as I say, I've considered this to be more a rotational sell-off. But now you've got areas that should be benefiting right now, like U.S. Steel, X. Holding well, and then all of a sudden today it's down 40.83, down $1.57, when in fact it should be a real beneficiary. You've got General Motors. Where's General Motors right now? Down $1.13 at 46.85, having gapped down huge from the 53. It's just 6 sessions ago, and plummeting to the 45s, and now it's trading at 46.85. Ford should be a beneficiary. Where is it? It's down only 20 cents, but it's 1.97% down at 9.95. So this is a work in progress. Now, the idea to bring factories and jobs to the United States, nobody can fault that. I think that's just something, personally, it's something here on the show I've been talking about for ages and ages. I've said, exporting all this is one thing, but you really want to be self-sufficient in many ways. That's the reason why you did not want to stop all oil production, etc., because you want to rely on countries that you really can't trust. So this is another thing. All right. So here's something. I just had a question. I'll do it right now because it's pertinent to what we're talking about. Tesla. The question is, what was the question? Just disappeared. Okay, I think I've got it right here. Yeah. Question is, looking at those monthly E's, D's, F's, and after back-to-back years of 25% gains on the SPY, should have taken off a lot more of our long positions or gone a lot more short cover. Yep, that's always, looking back, that's true. But we've been handling, I thought we handled the market pretty well. We knew what was coming, that there was this rollover and sector rotation. And to tell you the truth, if this is going to be a longer, and a lot depends on the action in the next 3 sessions, if this is going to be a longer decline, a real bear market because the monthly chart starts, you'll have plenty of time to be able to short and do all sorts of things. Yeah. So, okay, with that said, so Tesla is down 17 right here at 265. But I thought that was the question, but it's not that question. That's just the heading of the email. So Tesla, look, this is the inverted V. This is the pyramid formation, like the Eiffel Tower, straight up and then straight down. Not quite straight up and straight down, but it's certainly straight up, and then it comes down, a little bumpy on the way down. But most importantly, what we're looking at is within the field of innovation, look at this move in Tesla right from the 100 level all the way to the 490s. I mean, this is quite something. 488.54 was the December 18th high. And there's your dreaded H pattern once, big, large dreaded H pattern, another dreaded H pattern, another very quick one, and now we've got an even larger one. So yes, I think it's still vulnerable. I'll be right back. Basil Chapman, early edition. Dow futures are down 1,170, and the S&P is down 198.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Folks, we're back. So the pattern that we're looking at in this particular phase is this H pattern called the dreaded H, because if it takes out the left side low decisively, you can have a 1-to-1 to the downside. So within that context, we looked at Tesla, and Tesla had a good session yesterday, but today's down very sharply at 265. Okay, let's just do this again real quickly. We've got the YM, that's the Dow Futures, down 1,179, getting ready to test the left side low of the 13th. You've got the ES Mini down 189 at 5521. It's already taken out that left side low. This is the second time that it's taking it out, no, third time. And this is the one that is more serious. And I've got this arch formation that says there could be, it depends on what happens over the next 3 days. It depends on the VIX. Will we get some kind of it's just too soon, I think, to get a culminating VIX up in the high 30s, maybe even 40s, and the market down huge, and then get that V-shape turnaround. If it happens, I think it will be part of a process. So let me just show you this here, because it's all very important. I've been talking about it all week. This is Chapman Wave Dark News. There we go. DNI. If I can find it, there we are. There it is. And I say this is going to be key. If we can hold this key support, this is my Chapman Wave Dark News Index, and arches over. This is the inside track that's been fantastic support for a long time. If this gets taken out decisively and we go underneath the March the 13th low, right there, that's going to be a big problem, a really big problem. So I'm anticipating that if it's a work in progress and we're really going to continue down to lower lows and lower highs, we're going to get some kind of a rally in the futures, maybe today even, that just negates this intense selling pressure. You want the selling pressure to continue all the way, maybe into Friday, and then all the media just around the world has the headline saying markets are crashing, and then Monday we get some kind of a decent low, a really tradable low. Oh, that's one scenario. Okay, so let's just go back to what we're looking at in terms of the markets. So we've got that. We've got the NQ taken out its left side. Oh, I always do that. Click on here, and then I'm ready for the charts. NQ taken out its left side low a number of times. Right now it's trading down 790. This is the E-mini NASDAQ 100 continuous contract. It's like the QQQ, except the Qs are not trading on the chart. They're trading in the market itself. The Qs are down. Let me just check. Down to is that 18 at 457. So this is different. In other words, I haven't got a chart for that. This is a chart, and here's your trend line support. We're right at that support. Are we going to hold or not in the weekly chart? Let's go to the RTY, which has been the weakest of all. It is down 98 at 1960. Oh, look at that. That's in leg D. It's gone under the 200-period moving average. This doesn't look very good either in the monthly chart. The SMHs are down sharply, down 10 at 203.44. This is what I've said has been our clue all the time, that something's happening. If those semis don't go to all-time highs, and they stopped going to highs back in July of last year, I think it was at about 283 or something like that. And here we are at 214, and it's that 198 level. Start trading the 198s below this key support level from August of last year, 200.49. That's a problem. Let's go to the gold. Gold is down 77 at 3,088. Thank goodness yesterday, was it yesterday, the day before, we took a little bit right at the top. We took a little bit off our gold. This is the physical gold, PHYS. And we've been taking little bits off, and now we're going to see what happens. If everything's selling off, what will be working? Well, let me show you something very interesting. So that's gold. Look at silver. Gold is down 78. Silver is down $2.60. Look at that. Now that is a crash when you're looking just at the chart. in terms of the daily chart. If you look at the weekly chart, it says, oh yeah, we've been here before, but wow, that is some kind of turn down at 31.96 minus 2.69. We got out of our silver stock with profits. It just didn't look very good. Let's go to high-grade copper. High-grade copper plunging down 16 cents at 4.877. Oh, I shouldn't say plunging, but it's down quite sharply after peak D in the Chapman wave methodology in the daily chart. Hey, let's go to, I want to go to the dollar, DXY. Look at this. The dollar, this is amazing. The dollar, that is a plunge. Look at that. We've done it before in the weekly chart. This isn't as bad yet as the week of the 7th of March, when you went from 107.41 down to 103.46, right into that. It looks almost like the semiconductor chart right there, down at 101.52, down 2.28. Well, then you would expect gold to be, gold is selling off as well. So what's working? Let's look at the euro, EUR, USD. There we go. Leg C in the weekly chart, right in the Chapman wave inside track repellent zone in the monthly chart. Euro trading right now. This is going to be called a leg D. Just for the moment, it could actually be D or a B, but I'm going to call it D. Spiring up to the 1.109 level. That is up 2.1%. That is a really big move. And as I said, leg C. So that's where the money is going. And let's go on to got that. USD JPY, and that is the yen plunging. Goes to a peak D in the arch formation. Oh, look at this. There's the arch formation, the dreaded H. D. And now I have to put a down arrow all in one move. Down arrow, and there's an up arrow. And now it's gone below that. Day's young, so we don't know where it's going to close. But this is the H pattern. Okay, there it is. And he has the larger arch formation, and that just has a target at 146. If the yen takes out 144, let's call it 143, then all of a sudden you're looking at 139, the 200-period moving average, which coincides with the low that was made back in October, I think it was. September, last week of September, the week of the 20th, 139.5. And the 200-period moving average is 139.48. Let's go one step at a time. This is the level I'd be looking at. It's at 146, takes out 144, and then you're starting to accelerate to the downside. Dreaded potential H pattern in the monthly chart of the yen. Let's go on to bonds again. Bonds are up even more now, up $1.26. $1.26.30 at 119.25.30. Whew. So we'll see exactly what's going to happen. This is not going to be a very pretty day, I can tell you that. I'll be back in a moment. Basil Chapman, early edition, 8:38 a.m. Eastern Time. And Dow futures are down 12.27.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we're back, and this is the early edition, 8:42 a.m. Eastern Time, and Basil Chapman, Tiger Ignitions Hour. So I was looking at the 30-year T-bond continuous contract up 127, almost 2 points higher at 119.2732. And I've been saying for a while now that this is the first time in a great while that we've seen where the market went down and money flowed into the safety of bonds. That was the historical thing for 40 or more years. This is what used to happen. It didn't happen over the last big turndowns in 2022, et cetera, and 20. The market tanked and bonds tanked. So this, and yields went higher. So this is what I'm going to, just one more time. Let me just show you this. I'll do a little more on this tomorrow. Usually Friday is my technical day for Chapman wave notations. Let me just show you. This is the chart that I was talking about, the DNI, Chapman Wave Dark News Index, where I talk about internal highs, residual highs, internal lows, residual highs like earthquake and aftershock. And I said that this is an internal low, but I'm anticipating that we're going to possibly arch over, and how we test the left side the right side is going to be really important, because if we take out this internal low, that means we're going to be setting up something maybe like that, and it takes a while before we get the residual low. So this is really important and significant in the sense that I have at least parameters that I can talk to that aren't necessarily measured moves, Fibonacci numbers, etc., which I also use. But I like this in the sense that the chart itself is telling me internally this is what's important. Here are the series of lows, so it makes this whole inside track propeller zone important for looking out, and that makes the whole area of 40,100 to 40,000 in the Dow a possible target looking out. It could be days, it could be hours, it could be weeks. We just don't know yet. And you've got this here. Key support is at 41,088. Let's call it 41,000 right now. So those are the round numbers, millennial numbers, 41,000 and 40,000. So that's the Dow. Okay, let's get back to our story here. And it says that you've got the bonds is the place to go to right now. The TLT is improving. And within the context of the VIX index, let's see where it is at this particular point, because we just made a lower low. Oh, I always do that. Click here, and then you can go to your chart. Everything's cool. VIX.X, there we go. And what do we get? we get the VIX index now up in the 2691 area. So it's getting out of the 20 slowly. It's getting out of the 26s. And within the context of building up a cash position, we've been doing that. We've got a cash position. We have some shorts. You always say, I haven't got enough. We don't have enough in the short side. But yeah, at least we've got that. It's so much nicer to get a discount, a 15% or a 10% discount when you've got your money out and you can put it back 10 or 15% low or whatever it is. You put it back in. You're starting fresh. You haven't had that drawdown. You've got your capital. That to me is always imperative in this business. And there's another thing I want to look at right now, and that is, I did that. Look at my page, and I want you to see where. Oh, here we go. Cintas. You remember we're looking at Cintas as one of my market benchmark areas. Look at this. It's holding very well, but it did make, this is uniforms rentals. It did make a 228.12 high back in November and plunges down to the 180 level and then has a big rally. And it's in a leg C. It's looking not bad because this is the first week that the 9-period moving average in the weekly chart flipped back to green. The monthly chart is beautiful, but now I have to say, look at that. There's a chance that we arch over right there, and that's going to be key because a Cintas, URI, which is United Rentals, has already taken a dive from the 896.98 high. Monthly chart looks like an uppercase A. It made a peak F high, but it looks like the alphabet uppercase A, straight up, straight down, Eiffel Tower. This is the 896 level. Look at this. I just wanted to show you. So this is rentals. So to me, that's always a benchmark. It's just important to watch because, when rentals start to slow down, it's just telling you something that there's maybe in that field, there's a kind of a recessionary moment. So this is the left side, right side. And what do we do? Okay, so this has been the support level on the right side. And today it's trading right now down 30 at 615. So it's inside there. So here's your arch formation or pyramid formation. And it's about to take it out if it continues lower. So I'm just looking at this and I'm saying, okay, tell me what you're going to do next because that's very important. So United Rentals sharply lower, down almost 5% pre-market, made a peak A, B, C, peak D top in the daily chart, and it had a great session yesterday. Whew, not today. Okay. Within that context, so waste management. This is more macro. If anything, does anything stop waste? This is waste management. No, it makes new highs all the time. It's really a fantastic benchmark in terms of telling us about the overall because this tells you what the cities and towns are doing because that's where waste management does most of their business. And within that context, you've got this U-shaped pattern right here. Failed to get to the previous high. High was an all-time high last month. That was in March. March the 3rd, it goes to 215.481. Any round numbers? Yes, the day before there was an open 230 round number. Very next day, it makes an all-time high of 235.81. Plummets down to the 222-ish area, and now it's gone peak A, peak B, and in a leg C, and it's down pre-market, down 256 at 232, down there. And yet, that's still a very positive chart. So that just says to me, so far, towns and cities haven't really felt the pain because you would start to see waste management pulling back for whatever reason that is. Okay, so I've done those aspects. Oh, IYT. I spoke about this with Jacob the other day. I said the IYT has had a very sharp pullback, done the H pattern in the weekly chart. 75.50 was the high. November pulls back to about 64, rallies up to 73, double top, pulls back, and right now the 200-period moving average of 62.22, we're on it. We're at 62.50 pre-market, pre-market is one thing. Let's see what happens at 9:30 when we open. So this is very serious to me because you made a peak E in the weekly chart. This monthly chart is getting closer and closer to going pink. In other words, the 9-period moving average over the 14 is still very positive. If it goes pink, it means it's now negative, and that says there could be further to go on the downside. And this is the transportation average. That makes me a little cautious about the overall, the macro. How can you get out of this in a hurry? And I don't think that's the case. It's tough with the airlines. I'll be back. Dow is down, pre-market 1256.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Hi, folks. As I wrap this up, we have no idea where the market will be in, 6, 7 hours' time. Most importantly, this is what I'm looking at. The VIX index has rallied very sharply, but it's still in the 26s. 29.57 was the high 2 days before the 13th of March big rally in the market. So I'm anticipating that we're going to go quite a lot higher before we make really the kind of low that says now you can trade to the upside for quite a bit. In other words, weeks, not just days. So I don't see that happening just yet. If the market today comes back strongly, now the futures are down 1237, S&P futures are down 207. Let's just say, for whatever, doesn't matter what the reason is, if there is a bounce today and there isn't a reversal, an H pattern reversal coming back to the lows, and maybe then closing at the low of the day, if instead there's a rally that we close off the low and we're only down 400 or 500 points in the Dow, only down 80 or 100 points in the S&P, then I think other things are going to go on, because to get a really strong reversal, an ictus that says way overbought, the VIX index is way oversold, maybe Friday, then bad news, ugly Friday, and then bad news of the weekend, just headlines, and the cameras are all on Wall Street ready for the big crash on Monday, and Monday you get your big turnaround to the upside. To do that, a lot of things have to happen, but it's a scenario, it's not the scenario. The other scenario is we get a big rally, and now you've used up what could have been already a pivot moment. And that's what I'm thinking might happen, that we don't get that culminating rush to the downside and just everyone throws out the baby with the bathwater. What a lousy expression that is. Throws everything away. So that's the way I'm looking at it. This is not done yet. It's unfolding, and there are a lot of aspects to it, but it's the way the SMHs have come down that says you've just got to be very careful. That's why we raise cash for subscribers to the opening call. That's why we are short, not short as we'd like to be, but we'll see what happens. Have a great day, and I will see you tomorrow. Basil Chapman.